Hey everyone, it's Paul here. We're talking about the cost of ownership for a property. I assume you've watched the first video which went through our 5 steps or calculations that I use. Here's a live example. So here we have a buy price of $350,000, and yes people, there are properties available at $350,000. The second one is purchase costs on that is $15,000, and that's for stamp duty, legals, government fees, all those sorts of things. The next thing is rent per week on that property should be around about $320 a week. Then also for me, let's assume the interest rate, because you're an investor, let's assume you're going to be interest only, and let's pitch in the middle. Yes, there are cheaper rates around the 4.75 mark. And then lastly, let's assume it was a property that was new, so it had good depreciation in year one of around $12,500. So here we go, let's look at that. So the first thing we look at is the net income. So basically we go $320 per week by 52 weeks by 85% in our calculation. And that for me comes in at $14,144 per annum in net income coming in. The second calculation is the expense. So we know we had $350,000 for a purchase price plus $15,000 for costs, which equals $365,000. We then times that by 4.75% in interest, and then the magic number for that is $16,425 per annum in expense. We then move on to the next calculation, the third, the cash flow. So we basically say, okay, we've got an income of $14,144. We're going to then minus the $16,425, and that will give us our result. And that result for me is $2,281, and it costs you money. So I'll put those brackets around it. So for me, we know in a raw cash flow, that property of that profile will cost us $2,281 a year. We then go, okay, the after tax and depreciation, let's assume depreciation is $12,500, times that by 30% on the marginal tax rate. And what does that figure equal? That's $3,750 in a round way back in your pocket. So then we go, okay, that's tax and depreciation. Now the last two calculations are the fifth ones here. And for the first one, for the annual, we then go, okay, well we know it's 3, so it was $2,281 minus the $3,750, and that equals $1,469 positive per year. So we're saying annually, we know that cash flow is short the $2,281, then the depreciation gives us back in our hand $3,750. So our end number for the year is $1,469. And then we'll break that down and go, what is that weekly then? And then we know, okay, that property for me is $28 per week positive. So for me, it's amazing when you do the numbers and you do the correct numbers around what the cost of ownership. If someone had told you you could buy a property for $350,000 and you'd told you it would give you $28 a week in your pocket, I'm not sure if you would have believed them. But here's the numbers. Yes, they're gross figures, but it's a great general guide for the cost of ownership for a property. Hope that was of value to you.